You see a stock absolutely taking off, your heart starts pounding with that dreaded fear of missing out, and every fiber of your being screams, jump in. Now. You smash the buy button, and for a split second, you feel a wave of relief. But just as quickly, the momentum dies, the price nosedives, and you're left with that sick, sinking feeling in your gut. That one emotional impulse is the single most common trap that vaporizes trading accounts, and today, we're going to show you how to spot it, and escape it, before it's too late. That scenario? It's not just a bad dream. It's the painful reality for countless traders who get taken down by their own psychology. It is the #1 reason promising traders blow up their accounts and walk away for good. They don't fail because they can't read a chart, they fail because they can't read themselves. They get stuck in these nasty feedback loops of fear, greed, and regret that are way more dangerous than any market crash. In this video, we're not just going to talk about these traps. We're going to expose them for what they are, predictable, and more importantly, preventable patterns. I'm going to break down the 3 most destructive psychological traps that are silently killing your profits. And then, I'm going to give you a concrete escape plan to build the discipline you need to survive and actually thrive in the markets. So, let's get into it. The first and deadliest trap, the FOMO sinkhole. The first trap is the one we just walked through, and it's easily the most powerful, the fear of missing out, or FOMO. FOMO is that gnawing anxiety that you're sitting on the sidelines while everyone else is getting rich off some massive market move. This fear effectively hijacks the rational part of your brain, swapping out careful planning for a desperate, impulsive need to act immediately. So, what lights the fuse? It's a combination of market action and social pressure. You see a stock chart going parabolic. You open up social media, and it's a total FOMO factory. You see screenshots of huge gains, and chat rooms are buzzing with hype. This constant fire hose of other people's highlight reels makes you feel like you're losing a race you never even signed up for. And it's not just a feeling. Research and regulatory bodies like the SEC have highlighted that traders who are heavily influenced by social media hype are prone to irrational decisions and significant losses. This leads to the classic FOMO behavior, chasing the trade. You toss your strategy out the window and jump in long after the smart money has already taken the positions. You aren't buying because of a solid, pre-planned setup, you're buying out of sheer panic. What happens next is almost a script. You buy at or near the top, right as the early birds are cashing out. The price stalls, reverses, and you're left holding the bag as the stock tanks. The fallout is brutal. You take a nasty loss, your confidence is shot, and you're drowning in regret. This emotional chaos doesn't just cost you money on one trade, it poisons your mindset for the next one, leading you right into the next trap. Trap 2, the emotional rollercoaster. Once you've been burned by a FOMO trade, you're a prime target for the chaotic storm of feelings that can start calling the shots. This is our second trap, the emotional rollercoaster, powered by its 4 evil horsemen: fear, greed, hope, and ego. These feelings are perfectly normal for humans, but in the trading arena, they are your absolute worst enemy. Let's talk about fear. After a big loss, fear can be completely paralyzing. You might spot a perfect, A+ setup that checks every single box in your trading plan, but you freeze. You're too scared to pull the trigger, so you just sit and watch as the trade works out flawlessly without you. On the flip side, fear can also make you jump out of a winning trade way too soon. The second you see a little green, the fear of it vanishing makes you snatch up tiny profits, leaving a mountain of cash on the table. Then you've got greed, fear's overconfident cousin. Greed is that little voice whispering, "This is the one. Bet the farm." It's what makes you over-leverage your position, risking a ridiculous chunk of your account on a single idea. It convinces you to hold a winning trade for far too long, chasing some fantasy profit target, only to watch it all reverse and turn into a loser. But maybe the most toxic emotion of them all is hope. Hope is the glue that keeps you stuck in a losing trade. The price is crashing, blowing right past your stop loss, but you don't cut it. You hope it'll bounce back. You hope it'll turn around. Hope becomes your excuse for ignoring your own rules, and it's exactly how small, manageable losses spiral into catastrophic, account-killing disasters. And finally, there's ego. Ego is the part of you that just can't stand to be wrong. After a few wins, you start feeling invincible, like you've cracked the code. You begin bending your rules, thinking you can outsmart the market. Ego is what stops you from taking a loss, because admitting you made a bad call feels like a personal failure. But here's the thing, the market does not care about your ego. It will humble you, and if your ego's too big, it will wipe you out. Trap 3. The revenge trading death spiral. After you've been sucker punched by FOMO and thrown around by the emotional rollercoaster, you're at risk of entering the most destructive phase of all, the revenge trading death spiral. Revenge trading is that frantic, desperate need to make back the money you just lost, right now. At this point, you're not trading anymore, you're gambling with angry money. Here's what that spiral looks like. You take a loss, maybe from that FOMO trade earlier. You're furious at the market, but mostly at yourself. Instead of taking a break, you immediately dive into another trade, usually with a bigger position size, to win it all back, fast. This trade has zero strategy. It's a pure, emotional gut reaction. And because it's unplanned and low probability, it's probably going to fail, too. So now you're hit with a second, bigger loss. The anger and desperation crank up to 11. You feel like you're in a hole, and the only way out is to dig faster. You double down again, forcing another bad trade, and then another. Each loss just fuels the next one, creating a downward spiral that can drain your entire account in a single, brutal session. This is how traders blow up. It's a total meltdown of discipline, a complete surrender to emotion. You forget all about preserving your capital and start treating the market like a slot machine, praying for a jackpot that isn't coming. If any of this is hitting a little too close to home, if you've ever felt that pit in your stomach from a FOMO trade or the blinding rage of a revenge trade, do me a favor and comment, exposed, down below. You're definitely not alone, and just admitting it is the first step to beating it. And while you're down there, make sure you hit subscribe for more content designed to make you a sharper, more disciplined trader. The escape plan, building your psychological armor. Alright, we've exposed the enemy. Now, it's time to build your defenses. You can't just delete your emotions, but you can build a system that keeps them out of the driver's seat. This is your escape plan. First, write a personal trading constitution. This is your rulebook, and it's non-negotiable. Before the market even thinks about opening, you need clearly defined rules for what you trade, your exact entry signals, your exit strategy for taking profits, and, most importantly, your stop loss on every single trade. Think of it as the law. When you're in the heat of the moment and your emotions are screaming, you don't have to think, you just have to follow the plan you made when you were calm and objective. A plan turns trading from an emotional crapshoot into a disciplined business. Second, keep a trader's logbook. A trading journal is one of the most underrated tools for psychological growth. Log every trade, not just the entry, exit, and P&L, but your emotional state. Why did you take the trade? Were you bored? Anxious? Greedy? When you look back at your journal, you'll start seeing the patterns. You'll pinpoint the exact triggers that lead to your worst decisions. That self-awareness is the bedrock of emotional control. Third, use tactical pauses. The second you feel that anger, fear, or FOMO bubbling up, your first and only move is to step away from the screen. I'm serious. Get up, walk around, grab some water, do some push-ups, anything. Create a circuit breaker that stops an emotional impulse from turning into a financial catastrophe. A lot of top traders use a 2 strikes rule. After 2 consecutive losses, they are done for the day. No exceptions. This rule alone can kill a revenge trading spiral before it even starts. Fourth, go on a social media diet. During your trading hours, log off social media. The constant stream of unverified hype, bragging, and noise is engineered to trigger your FOMO and mess with your head. Your trading decisions need to come from your analysis and your plan, not from the fear that some guy on Twitter is making more money than you. Remember, those victory posts almost never show the crushing losses. Fifth, and this is a big one, learn to embrace the miss. You will miss winning trades. You will see stocks go to the moon without you. This isn't a failure, it's a completely unavoidable part of trading. There is always another trade, another day. The goal isn't to catch every single move. The goal is long-term survival and consistent execution. When you shift your focus from missed profits to disciplined execution, your entire relationship with the market will change for the better. At the end of the day, the biggest threat to your trading account isn't a volatile market or a faulty strategy, it's you. The psychological traps of FOMO, the emotional rollercoaster, and the revenge trading death spiral have claimed more accounts than any market crash in history. But the best part is, you are in complete control of that. By building and actually respecting a trading plan, by journaling to understand what makes you tick, by knowing when to walk away, and by accepting that you can't catch them all, you build your psychological armor. You go from being a reactive, emotional gambler to a disciplined, proactive trader. Master your mind, and you will master the markets.